reach-wit thesis of kind of start a business, buy real estate, all cash, no tax, it is definitely one of my core theses in life. But even probably ahead of that would be owning a business is the path to lower tax and wealth.
I wanted to just jump right in. On Twitter, you're really known for like your main thesis is like start a business, buy real estate, employ tax strategies, enjoy the cash that the business throws off, and pay little to no tax. So I wanted to just kind of hear a little bit about some concrete examples of maybe clients or just examples that you have seen in your own work life or even your own personal life of how you employ this strategy.
Yeah. So what an awesome idea, right? You have this business or job that kicks out money, and then you go buy real estate that helps you build wealth, and then you use depreciation to compound quicker and hopefully defer taxes for a really long time. And so, yeah, a bunch of there's three main examples I'd think of. There are just you're kind of like core real estate syndicator. Like Nick Hubert talks about this all the time that, he has successful businesses on the side, and then he has this core business of real estate investment, and it allows him to defer taxes like crazy. Kind of a more closer to home example would be I'm a dentist and I own a dental practice, and we buy a building that we operate out of. We have this expense in our life. It comes every month. It's called rent. Well, we can pay rent to ourselves and get a chunk of land and grow our wealth. One more example I think of is a client I have where the husband works for one of the, big FANG companies out there and makes $1 million a year. And the wife runs kind of small real estate syndications and runs their own real estate. And she's a real estate pro. And that's also a wonderful kind of marriage of, big earner over here, real estate kind of wealth manager over here. And,
So
and
I
they
kind
get
of
to,
want to pause there. Can you explain a little bit like what a real estate professional is? There's a lot of we've got kind of like beginning,
sure.
intermediate listeners, and so like what's the definition of a real estate professional?
So yeah, real estate's awesome because you create all this kind of phantom expense right up front called depreciation the year you buy this property. But the problem offhand is that real estate income is deemed passive in nature by the IRS and by the tax code. So there's different types of income. There's active income, which is, hey, I go to work and earn a paycheck or I own a business. There's passive income, which is I don't work in this business. And then there's, portfolio income, interest you make off of stocks and stuff like that, capital gains. So passive losses cannot offset active income normally unless you are a real estate pro. So to be a real estate pro, you have to spend 750 hours and more than half your time each year working on or in real estate, in the business of real estate. So that's this bar to clear to be able to employ these strategies in your life. So you have to find ways to get there.
Yeah, okay.
Does that make sense?
It does. It does. So it's 750 hours, half your working time. It could be
Yeah.
anything real estate related. It could be managing real estate, renovating real estate. This is
Acquires, constructs, reconstructs, manages. Yeah. I mean, so for example, being a general contractor would be a great example of you wouldn't necessarily think you're in real estate, but you are a real estate pro.
yeah,
There's this
yeah.
IRS publication 925 that really kind of breaks this totally out about passive activity losses.
Okay,
So
I may link
sh-
to the show notes
shout out, shout out
to the IRS.
925. Yeah.
Right. I wanted to get into like your thoughts on just owning a small business and just like the tax deals that are available, the tax strategies that are available to shield income, preserve some, your some of your income. Do you think owning a small business, whether it's a side hustle or even something larger, is something that most people should do? Are they missing out like by not taking advantage of the kind of the IRS tax codes that are the benefits that are in place there?
Yeah. I mean, the the retweet thesis of kind of start a business, buy real estate, all cash, no tax, it is definitely one of my core theses in life. But even probably ahead of that would be owning a business is the path to lower tax and wealth. And it's just true. I mean, it's not for everyone in the sense that like there there are just people who can't do it for one reason or another because of some instance in their life. And man, they're like I wrote a thread a while back about a client of mine who's a W-2 employee who makes $6 million a year working in kind of high finance. And
Yeah.
that guy doesn't need to, that guy's not a W-2 loser, right?
Hmm. Hmm.
So all these, Twitter is no place for nuance. All this stuff gets totally convoluted. But
Yeah.
I mean, I think owning a business is this path to lower tax and a path to wealth. And, there's a bunch of reasons why. Like, the main reason, like, I used to have a job. I was an accountant. I showed up at an office downtown, drove my car to work, sat in my cubicle and hammered away taxes. So I would go earn money, pay tax, and then go home and start paying my cell phone bill and paying for, you know, uh, what would like personal development expenses that my company wouldn't reimburse. And
Hmm.
I would have these kind of like fringe expenses that were really for me and my business, the business of me,
Hmm.
that I couldn't deduct. Well, when you go into business for yourself, all those go above the line. You know what I mean? You
Right.
earn money, you pay for everything, and then you pay taxes. So that's it. The other things are benefits plans and, the idea that you can go then run these asset strategies. Like if you just are a guy who makes $6 million at your job, that's awesome. But you can't go buy a building and work out of it
Hmm.
and say that it's, a business asset. It just doesn't work that way. And then the last one would be succession planning. Like, you can't sell your job. I mean,
Yeah.
you probably have some deferred comp or you have some kind of ways to get out of this partnership that you're in, or you have some kind of golden parachute at the end. But
Yeah.
regular folks, you can't just say, "Hey, I want to do something else. Here, hand me $2 million, and I'm going to take a little time off and go work on the next thing." Right?
Yeah, you can't sell the job, right? So, yeah, I've got a buddy that was a high earner CFO at a large insurance company in Columbus, and it's like once he stopped there, like it was over. So there's no
The
more
money
income
stopped showing up.
coming in.
Yeah,
So, yeah. What about like retirement plans, like for small business owners? What are some of those that you would recommend for a small business owner to explore and to utilize?
yeah. I mean, the big difference is if you have employees versus if you don't have employees. Because once you start bringing on other employees, you can't run these crazy um, retirement plans that really serve you as the owner and then have them employees don't value in my experience, employees don't necessarily value like these huge matches and huge contributions the way owners do, because employees are just like, give me my money, man. I showed up
Yeah.
to work, I want you to pay me. So that
Let's talk
that
about
becomes yeah.
can I ask you about, like, I was listening to the Smart Friends episode, and you were talking
Sure.
about a breakout with I think David Perel, the writing passages guy,
Yeah.
and you're talking about the power of writing, and I think the thing that you were most interested in was like the creator economy. So like more like solopreneurship type stuff. What can you kind of focus on? It seems like that's like an interest of yours, like the creator economy and solopreneurs. Like for a solopreneur, what are like some things like
Sure.
I think of a guy like Justin Welsh, right? He's kind of like the
Yeah, yeah.
solopreneur kind of guy, right? Who's killing it. And what are some things that like somebody that are cloning him or modeling him? What are some like retirement things that or tax strategies that solopreneurs should be looking at?
Yeah, totally. I mean, those are folks who, do not have this employee versus this principal agent issue of employees. They're their own employee. They have no other kind of mouths to feed in that sense. So they can go set up this Cadillac retirement plan and Cadillac health benefits and Cadillac everything that completely serves them. So there's different models to do it. People do SEP plans, self-employed pensions. People do solo 401ks. People do mega backdoor Roth 401ks. Like there's a lot of information on the internet, and a lot of it, and obviously go do your own research and
Right.
work with a planner. But a lot of these plans will allow you to either get $65,000 of deferred money into a qualified plan, or you can pay tax and get a big chunk of money into a Roth plan that can just go compound tax free forever, theoretically. And then I mean, you even get into like defined benefit pension plans like that big companies would have that can allow certain people to get a couple of hundred, two, three, four, five, $600,000 deferred every year. And then you can go start investing out of that.
Yeah, it's huge.
Yeah.
I know that you did a small business tax workshop with Nick Huber, Sweaty Startup, recently.
Yeah.
I forget the date of that. It was like maybe a few weeks ago or something like that. But I wanted to hear for our listeners that didn't get a chance to listen to it, weren't maybe aware of it. What were some of like the top 2 or 3 takeaways from that event that stand out to you that that somebody as a small business person or as a real estate investor should know or should learn about?
Yeah, definitely. Ping
there's
me
a lot there.
If you, yeah, no, a lot of the things we just discussed about, taxes and benefits and assets and succession and all that. One other thing, like we talked about SALT cap workarounds, that like in 2017, Tax Cuts Jobs Act hit. You used to be able to deduct all your state and local taxes. Now you can only deduct $10,000. Well, business owners now have this kind of little backdoor that a lot of states give you where you get to deduct your state income taxes, or like the qualified business income deduction. I post about that.
Explain that a little bit more,
annual post.
Explain that in more detail, if you would. The qualified, what is qualified
income?
Business income?
QBI.
Yeah. QBI.
So right. There's this deduction, same thing, 2017 Tax Cuts Jobs Act. They do this major tax reform like they hadn't done since the 1980s. And one thing they did was lower the corporate tax rate from 35% to 21%. And so they threw this bone to small business owners saying, hey, we're actually going to give you this 20% deduction out there on QBI, qualified business income, which, if you own a partnership or an S Corp, a lot of the income that spits out of that would qualify. Mm-hmm. And so there's one issue though, or there's a couple of issues, and there's a couple of qualifications and workarounds that I see people come in, prospect clients who are consistently under optimized, where I just say, hey, we could have gotten you a $400,000 deduction, or we could have gotten you a 20% deduction on your $2 million of EBITDA, but for you didn't pay yourself a bonus, or you didn't kind of aggregate this stuff right. And so like there's just little hidden landmines and little levers you can pull different places that you might not even know about, but structuring the right way or kind of moving things in the right order can make a meaningful impact. I mean, that's 8% of your effective tax rate out there that's just laying on the table.
Well, I think it's really hard as a investor, real estate investor, or a small business owner to stay on top of what is available. And if your accountant isn't, and it's even hard for an accountant to stay on top of it. I think you would probably agree. Like there's just so much out there. I think Chris Powers made the point that, he, as an investor, he's focused on real estate and you've really got to find somebody to that really knows the tax codes to take maximum advantage of what's out there. I wanted to hear a little bit about like just common, I guess, the biggest mistakes that you see real estate investors make on just missing out when they're doing their taxes and potential savings that are out there that they just, I mean, you mentioned the one here, but like, are there others that like people aren't taking advantage of? I know in my own case, and we're going to get into this, cost segregation stuff is something I've never done. Like,
Yeah.
and
Yeah.
it, I feel like I've been missing the boat a little bit, honestly. And I brought it up to my accountant, and he kind of explained it, but it certainly wasn't something that he urged me to pursue. So,
Recommended.
yeah.
Yeah. But and I think, like, here's the setup. Like,
Mhm.
accountants over the last 3 years have been, this thing happened in March of 2020 that kind of set the world on tilt. And at least in America, Congress passed all of this kind of like emergency stimulus legislation and made accountants and the IRS the like vector for stimulation distribution to small business in America.
Mhm.
And so it screwed everybody up because everybody had to go learn a lot of new rules and figure out the best way to get these kind of benefits, whether it be PPP loans or ERC credits or, all of that. They basically made the accountant the kind of chief officer of stimulus to small business in America.
Mhm.
But I mean, this has happened. Accountants have always had the rap of, hey, they're not proactive and they're too conservative and they don't understand my business. And it's a hard job, man. So,
I can imagine. Yeah.
so with that being the setup, business owners aren't yeah, I want to focus on my business. I want to focus on my investments. I don't want to focus on my tax strategy. Eh, You have to either find a partner in your business who can help you operate and optimize all of that, which is, hopefully your accountant. And you also, frankly, just have to buck up and figure it out yourself because
Right.
no one,
No one's going to care
you
about your
raise
money
the
like you
money.
do. Right.
Yeah, like, you either raise the money from yourself or other people, and it's your duty to care. So,
That's right.
yeah, like, when I started tweeting in October of 2020, I've gotten a lot of this from a lot of people. I started breaking down these strategies. I mean, my first tweet was, you know, all cash, no tax, run bonus depreciation, run cost seg as a real estate pro.
Mhm.
And people started out of the woodwork going, what is this? And
Right.
had been operating in real estate for 15 years, having never run cost segs, never run bonus. Well, it got really sweet in 2017, but
Mhm.
if you're not taking it, you said you feel like you're missing the boat. It's kind of true. So the biggest mistake people make is they don't have the right partner or they're not focusing enough on tax. Like,
Yeah.
in some ways you go, well, the tax is the tax and it is what it is, and I'm just going to pay it. But that joke, like, don't leave a tip. I mean, 40 to 50% of your bottom line business income is going to be paid to the government in the form of taxes. Like, it's worth getting right.
Yeah. Yeah.
It's the biggest line item expense you'll have.
Well, and
Yeah.
one thing I appreciate about you, just and I think Chris made this point, is you've made tax and tax planning, financial planning, you know, interesting, and it's been super useful to me. Like I think probably I found out about cost segregation. I think I started learning about it maybe last summer. I want to say,
Yeah.
between you and Nick, like just hearing about it, and I kind of wanted to jump in a little bit more to cost segregation. So for our beginning listeners who don't know what that is, just at a high level, explain what a cost segregation study is, and then the benefits of it, like why somebody should be doing it.
Yeah. So, a cost segregation study is an engineering study, like you would get a survey or an appraisal or a building inspection. It's a report at the end that takes the building that you just purchased and blows it into its component pieces and tags a tax life onto every component of the building. So yeah, think about one of those blueprint diagrams with the entire thing exploded and in its kind of separate parts. And the reason we do that is because 5-year, 7-year, and 15-year property, which, for example, would be parking lots and refrigerators and certain, accessory equipment and accessory plugs and outlets. And I mean, there's this whole litany of the type of qualifying property is not part of the building, but is a separate type of property called 1245 property. And so this 1245 property, remember 2017 Tax Cuts Jobs Act, they renewed 100% bonus depreciation for all 1245 property and
So what does that mean?
looped in, yeah.
Explain what that means, because it's
that.
Go ahead. I'm
Yeah,
sorry.
there's one more point of clarification is they opened up bonus depreciation to used property. It used to only be that like you would build a new building and it would be qualified for bonus. Well, now you can go buy a 30-year-old storage facility in a cornfield and bonus depreciate 40% of it. So, what that means is that as you kind of isolate these components of your building that are 5, 7, and 15-year property, you can add those up and bonus depreciate them year one. So you can get 100, or in 2023, 80% of that expense accelerated to year one and create, like I mentioned earlier, this huge phantom expense. So like if I were to just walk through a case study, let's say you bought $1 million storage facility or office building. Great.
Can I
$1 million office building. Yeah.
Because I have recently. And so like, just for selfish reasons, I want to hear
Beautiful.
like how this would go. Like I've bought a
Sure.
building. It wasn't a million, whatever, it was a little under that, renovated it.
Yeah.
And so I wanted to hear about that. Like the case study that, is kind of my own personal example. So
you bought $1 million office building. Well, some portion of that, for easy math, let's just say 200,000 was land. So 200,000 is land and 800,000 is building improvement. Well, for an office building, it would normally be depreciated straight line over 39 years. So, 2% a year or 2.5% a year, let's just say. And in that easy math, that's $20,000 a year on this $800,000 building. So you bought $1 million building, you put $400,000 down, and you took debt on of $600,000. So $400K went out of your pocket, and you're going to get $20,000 a year of depreciation, for the next 40 years.
Mm-hmm.
Well, when you employ the strategy of cost segregation and bonus, we're going to take that $800,000 of building improvement and we're going to go find 30% of it. Easy math. 30% of it is 5, 7, and 15-year property. So you're going to get a $240,000 deduction year one instead of a $20,000 deduction. So it just so happens that the year $400,000 leaves your bank account, you're greeted with a $240,000 deduction. And so the levers are how much land is in the property, how much of the building is deductible, is it 25% or 35%, and then how much debt did you use to buy the property? Because if you bought it with 90% debt, then you really just put $100,000 down and you're still getting $240,000 back as a deduction year one.
Right.
So
you're bringing up a lot of questions here for me.
Good.
One of them is, so I had Yona Weiss on the show, and he mentioned that when he brings up cost segregation to investors in real estate, investors, accountants, things like that, in general, people may have heard of it, but in general, they don't know that much about it and definitely don't utilize it. So, I mean, you just ran the numbers here on this. It seems like a absolute no brainer, easy sell. I don't understand why it's not more commonly done. I've got a father who's been in real estate his entire career. He's 80 years old, and I asked him about cost segregation. And he didn't know about it, and it seems like this is often the case. So, I wanted to get your thoughts on that. Like, why is this?
Yeah. So I mean, I've read I read a trade piece that said 3 to 5% of people who could qualify and benefit from cost segregation use the strategy. So that seems to line up with what you're saying. And so,
Wow.
yeah, I mean, we've had the benefit of having a Twitter platform through Nick and through me and
Right.
through the at RE Cosseg account, which all we do is educate the public in this interesting way of you know, when you tell a real estate investor, hey, you can pay less tax and defer tax and compound quicker, people are excited about that. And then people start to look into it and then people start to understand it. And I mean, it's not for everybody and there's downsides. The downsides are depreciation is real. So you're taking all this depreciation up front as a phantom expense. Meanwhile, over the next 40 years, your building's going to turn to rubble if you don't fix it.
Right.
So
Right.
you're going to need a new roof. You're going to need to repave the parking lot. Recapture is real. So if you go sell the thing in 3 or 4 years and
So in that case, if you're going to if you're going to sell it in 3 to 4 years, you would not recommend doing a study, correct?
well, it
Or is it
depends.
just the
So
number? It just
you
depends
know,
on the numbers.
yeah, you have outs, you have well, you may want to do it just because again, the year all the cash leaves your bank account, you get the deduction. Then the year the cash comes back, you pay the tax. So like I would rather pay tax. I'd rather get a deduction as cash leaves my account and then pay tax when cash comes back into my account. It
Right.
becomes kind of like a retirement account, but it's just uh non-qualified, you know, it's just your money. So,
Yeah.
but it's that same idea of like I put 20 grand into a 401k, it grows and grows and grows, and then the day I pull it out, I pay the tax on it. You're just deferring tax,
So
but
so
deferring
if you
tax is powerful.
yeah,
Sorry.
absolutely. So I mean, so you and Nick have started this company, Cost Seg Solutions, RE Cost Seg, I
Ari
think, right?
Koseg.
RE
Yep.
Cost Seg. I wanted to hear a little bit about that, like how you guys ended up partnering. I wanted to get into. I heard Nick actually on the on our interview. He talked about the three different ways that companies can compete. One was on price, one on quality, and one on speed. And I wanted to hear how you guys think about that. Like, how are you competing in the space? What's your competitive advantage? Just kind of go into a little bit about how you guys teamed up as in that partnership, and then just your competitive advantage in doing the studies.
Yeah. Um so I've known Nick for several years, and Nick, you know, was the guy who dragged me on Twitter and has dragged me all the way along to you know, having the following I have today and helped me out a lot. And Nick's a good friend and a client. Nick and Dan at Bolt Storage, and so you know, we had talked about. I'd always liked this business of cost seg because it's you know, when I take on an accounting client, I've taken on their business and their personal and their state and their
Yeah.
grandma and their grandson and just their whole world. Whereas cost seg is just like, yeah, you have to be an expert. You have to know what you're doing, but it's one line item on one tax return. You know,
Hmm.
you're ultimately boiling down this whole business to come in to be a very, very close-ended project for better or worse.
Yeah.
So I've always liked the business, and you know, Nick has been a power user of the product. He's liked the product, and then he's seen me espouse the benefits. He has as well, and then he's started referring a lot of people to a cost seg company. Well,
Mhm.
one day, you know, we woke up and said, "Hey, let's start our own." And so we immediately started we hired an engineer and a salesperson, and we developed a process. My wife, Melanie, is the CEO of the business, and she runs the day to day, and she takes care of all the big stuff. So I think it's somewhat of a commoditized product,
Mhm.
but our kind of key advantages are, one, we have a platform to educate the end user, of which 95% are either uneducated or have become educated and decided not to do it. And then two, we have this access to kind of talent and labor and systems that build off of Nick's business and off of my business, and we've come together to really build this awesome flywheel of how to get these things done really, really well.
And you guys have grown really quickly, right? You've got
Yeah.
26 employees, something like that, maybe
Y-
more by now. And revenue's kind
we
of gone off the chart.
Yeah, I mean, the revenue's been banana. We got yesterday the notification of like, "Hey, it's your 1-year Twitter anniversary," and
Oh,
I
nice.
sent it to our group chat and was just like, "Holy smokes, we've done a lot in a year." And
Yeah,
so,
yeah.
yeah, it's been a, kind of up and to the right curve, and we've hired and hired, and we've built a whole team, and we've built a whole system, and we've iterated probably 4 times in the last year of just kind of V1, V2, V3, V4. So it's been wild.
Working out the kinks. Yeah.
Yeah.
The biggest challenge to taking control of your personal finances, improving your investment returns, and building a better future is just getting started. This means getting organized, having a plan, and being disciplined. As Mark Twain once said, the secret to getting ahead is getting started. To break out of the treadmill of slaving away each week only to have nothing left over, watching the savings you have get eroded away by inflation's vicious bite, or freeing yourself from the corporate grind. It all requires you to master the conversion of time into value. To help you do this, we created a list of 4 simple steps to taking control of your personal finances and life. And you can download it for free by clicking the link in today's description.
So I wanted to hear about that. Just some of the challenges of,
Sure.
because I heard Nick talk about like starting the company, and at one point, it's like mostly virtual. I don't think, I've
Yeah.
met you, but I think in general, like you hadn't met a lot of the guys that are working, people that are working for you. Talk about some of the challenges of running a company like that, whether you want to call it virtually or from afar.
Yeah.
Like, what's that been like? I'm curious to hear.
Yeah, so it's been entirely kind of distributed, and man, the challenges are you have to have leaders in the right seats who have the genuine interest of the company. So we've been lucky to have kind of our lead engineer who's just the first guy we hired. We got really lucky, and he's stepped up, and we had the lead sales guy, and he's stepped up. The real challenge in building that quickly is like, I don't know if you've ever read that book, The Goal, that
Yeah, yeah.
talks kind of about business. It's just like you're chasing bottlenecks everywhere. Like we were chasing sales immediately started coming in, and then we had a production bottleneck. And then we've finally built production into this perpetual system where like I feel like we could scale up to anything at this point, in that we have great people, we have great systems, we have great processes. And so then now sales becomes the bottleneck of like, oh, well, we now have this huge team. We now have this huge machine that just churns out work. We got to sell into it. So I feel like you're always chasing something of either more sales or, more systems and labor to get the thing going. And it's just happened so quickly. It's this ping pong ball.
Yeah, that's interesting. Because I would have thought the opposite. I would have thought the sales would have been like you have more sales and clients that you know what to do with, and the hard part is like producing the actual study
It
itself.
was.
That's
It
initially
was
how it was.
until
Yeah,
it wasn't.
got it.
Yeah,
Yeah,
until we were like, "Oh, now we have this method of how we do this, and we have this system of how we get on the calls, and the system of quality control." And now, yeah, I mean, we have the this kind of amazing, cost seg vending machine where you input your information and you get on this virtual site visit, or we fly out to your building and walk around, and like we get it done, and we get it done on time, and we get it done really, really well, which is awesome. But yeah, and so now, our ambition just never seems to end. So,
Yeah.
now we go, well, we need to grow. We need to go more. So,
Yeah. I
yeah,
heard Nick's
it's
interview with Anthony Pump, whatever, I forget how you pronounce his last name, but he threw out some numbers that were like, wow, pretty sizable what the company, what his long range view, probably yours as well, of what the company could do. So it's pretty cool, like pretty exciting. You've also
yeah, and
got, go ahead.
it's just been a blessing for, I mean, it's just like, I've never started something that just worked immediately, just like that. Like, I think my first business, like when I became an accountant, I sent an email to 200 friends and family, and I got to work and kind of never turned back. And this is the same way. It just was like there was no fighting it. It just worked.
Yeah.
So
Well, like I said, it seems to me like an easy sale once you explain it and you educate people and people realize the numbers. Like, what it doesn't
yeah,
seems like a
the
no-brainer.
proposal is
to me.
literally like, hey, pay us $5,000 and we're going to save you $500,000,
Right.
100 to 1. Do you want that or no?
Yeah,
Like,
exactly. Yeah.
like,
And it goes back to like what we started the episode off with starting a business, buy real estate, employ tax strategies, enjoy the cash flow, and then pay little to no tax. It seems like that's how you're doing it in your own life. You've got, the cost seg company, you've got tax credit hunter, I believe it's called. And then you've
Yeah.
also got Better Bookkeeping. So I wanted to hear a little bit about those other businesses too. Maybe Better Bookkeeping, if you want to talk about that, or
Sure.
I'll leave it up to you.
Yeah, so Better Bookkeeping was is something that I've been working on for about 2 years, which is we rebuilt a tax software from nothing out of so here's the principal story. A client came to me. He was a real estate private equity guy. He kept all of his books on a spreadsheet, and it was really well done. It just was laborious. He didn't like to do it, and it was a pain in the butt. And he's typing in receipts every day. And I just say, okay, listen, we're going to take this off your hands. We're going to get you into, the big Intuit QuickBooks product out there that everyone uses. And we got him all the way into the product and was trying to show him how to use it and all that. And it was like legitimately a worse product than the system he had already built.
Mhm.
But, because it just was oversized for his needs.
Mhm.
And so I started to think, well, how do I get, a bank feed at the front end and effectively a spreadsheet at the back end? And how do I offer my own tax insights? Because I get everyone on this really, really uniform system. And so
Mhm.
that's how Better Bookkeeping was born. And it's turned into this productized service. It's done for you bookkeeping, tax preparation, and tax kind of consulting for the Justin Welch solopreneur type people, or the small business owner, or venture backed kind of early stage founders. And we've scaled that kind of in a whole separate venue, but using a lot of the same tactics that we use to scale RE cost seg.
Yeah. So I want to hear, you've got a ton going on. You've got,
Yeah, I do.
I mean, a ton. I kind of wanted to just hear about like an average day, like how you're spending your
Yeah.
time, like what are you focusing on? I also wanted to hear like what you're most excited about, like in terms of the different projects you've got going. Which one do you feel like has the most potential?
Yeah, man. Oh, it's, I've looked at, so what do I spend my day on?
Yeah.
I mean, I think ultimately this distribution engine at the front is the biggest thing that I like. The most valuable thing I can spend my time on is writing threads that clearly explain tax ideas to people, or writing a newsletter
Yeah.
that clearly explains tax ideas to people. That seems to be what people connect with, or financial ideas, as they were. So I think, I mean, I've seen people who I admire a lot ahead of me, like Peter Maluk in creative planning, or Andrew Wilkinson
Yeah.
with Tiny, and these people who have forged this road of, you ask what I'm most excited about, I'm going to just give you this cop-out answer of like, I'm excited about everything, because I believe all these are puzzle pieces that fit together with distribution at the front to, when all of these pieces come together and they're all doing $75 million a year in revenue, they all become big enough, together, they all become big enough to be merged into some, huge vehicle to, you know, uh, come together to be this awesome thing. So that's how I've looked at it. And people say focus on one thing, and it seems like I'm focused on a lot of things, but actually, I feel like I'm focused on one thing, if that makes sense.
That makes sense.
Which is, building the best kind of accounting firm that has ever existed for business owners and entrepreneurs.
I forget how David Senra phrased it, but like something about like a
Maniac on a mission.
Maniac on a mission, which I really liked. But then I started thinking about, same with myself. I've got a lot of different things going on. And I thought like, well, maybe I should just be a maniac on a mission on just one thing, so.
Shout out Jocko Go, just
yeah, exactly. Right. Yep.
You drink it and I don't know. No, but it is hard to say like what is focus. You read a book like the Power Broker with Robert Moses. I talked about this in the last pod, maybe with David and Eric, but like, that guy cornered New York. Like you don't do that by working on one thing. Right. You have to work on a lot of things all at once. So but you also have to be tremendously focused. So it's hard to say.
Yeah. I wanted to talk, you mentioned like the most important thing you can spend your time on is distribution and creating content. So I wanted to get into a little bit about Twitter. You did a great episode with Chris Powers, you and Nick did 3 or 4 months back, I would say, but you had said that Twitter has accelerated your careers by 20 or 30 years, something like that. And Nick, I heard him say like something about how without Twitter, he'd still own a moving company and a handful of self-storage facilities. So I just wanted you to talk a little bit about your experience with Twitter, just how it's benefited you, how you think about it, and then a little bit about how like other people like who don't have 60,000 followers or whatever your number is at this point, how they can create content that's useful, but that you have done. Like that's been the key, I would say, to like you and Nick's success is you're putting out content that people want and are learning from.
Yeah. So, I was lucky to start in a time that, I started this 3 years ago and the space might be more crowded today, but a lot of the reasons why you couldn't do this are just stories, because we also just see really quickly, like, there's a new guy every couple of weeks who just comes in and or gal who just comes in and immediately starts hammering tons of value and then builds a following. And you don't have to have a 65,000 follower or a 300,000 follower or even 25,000 followers to gain tremendous value from Twitter. As soon as I started writing my ideas, just this inflow of people immediately started coming in. I mean, Kevin Kelly wrote about this 1,000 years ago.
Yeah, I was just thinking about that. I was going to bring that up.
Fans. It's
I love that.
Yeah, you literally just need your people. You don't need all the people, and frankly, all the people. I think Nick Huber would tell you Twitter was more fun at 30,000 followers than it is at 300,000 followers. But, 300,000 followers gets you something that 30 doesn't. So,
sure.
I mean, if you have no ideas, then it's a problem. But I don't think, and maybe I think a little bit differently than other CPAs, but also I just came in with every idea I ever had and just gave it away for free. And, we did that the same way with cost seg. We go, here's exactly how cost seg works. Take it and try to do it yourself. But we have 25 people working pretty hard at it. So you may want to
Right.
use us just,
Right. Yeah.
because
So I wanted to hear about your the creative process, writing in general. You went to Capital Camp recently. We're going to get into Capital Camp a bit, but talk about was writing something that came naturally to you? It seems like for Nick, it's really like a strength. I wanted to hear about how it's been for you. Just writing is like a real skill. It's almost like a superpower if you're great at it. I would definitely say it's a superpower if you're great at it. I wanted to hear how it's been for you. Just crafting a thread is an art form, I think.
Yeah, and I mean, I wouldn't say I'm a 10 out of 10 thread writer or hook writer, and I've gotten help. Sometimes if I'm about to write something that I really, really want to go bananas, I will send it to other people and say, "Hey, help me clarify this." So, I mean, writing takes practice. I don't love writing. I wrote out a lot of my ideas and then kind of canonized them in this big thread of threads and then just kind of left it there. And lately I've been working on rewriting a lot of my ideas and relaunching a newsletter that I'm going to, a big sequence that's kind of a 40-week sequence of kind of a lot of my threads and a lot of other ideas. Because
what's the name of the newsletter? I'll put a link. I'll put a link in the show notes. What's the newsletter?
Here, I'll send you a link. It's called the General Ledger. So, and I think that idea of, that evergreen drip, it's going to kind of replace a blog in some sense of just now I can send new people who enter my orbit all of my best ideas and I can front load my best ideas to these people. So, I think that's pretty powerful, but I've never just loved writing. Writing is kind of a means to an end to get my ideas out there,
Yeah. That's good stuff.
Nick becomes possessed. He has this idea and he drops everything and just hammers out a 300 thread or 300 tweet thread.
Yeah.
I haven't
I'm just curious because we've got a newsletter also called We Study Markets that the Investors Podcast puts out, and one of the things I've been in charge of is doing the threads on Twitter to whatever, get subscribers and get people to sign up. So Nick talks about the top of the funnel, kind of casting a wide net, and it narrows down and narrows down and narrows down to the point where you've got your clients that that's really ultimately where things are headed towards, or where I don't know. It's just interesting. The whole strategy is interesting for me to think about.
Yeah, that's a big way I thought about it, because I got 65,000 people up here and I ultimately have 150 clients at the bottom. I run a small accounting firm with 15 people in it, so that's why I even started to build cost seg in the middle, or a newsletter in the middle, or this Better Bookkeeping product. I think I can have a lot more clients who fit a very narrow, specific subset of type of customer.
Yeah. I wanted to kind of jump into a new topic here. We had mentioned the Smart Friends podcast, which I just found out about it. Really love it. It's David Senra, who's the founder's podcast guy, and Eric Jorgensen, who wrote the Almanac of Naval Ravikant, which is a great book. You're the three of you kind of just rap and talk, and it's really great stuff. I think you've done 3 or 4 episodes, but one that you just recently did was lessons from Sam Zell. And I wanted to hear you guys talk through that, some of the biggest lessons that you learned from the life of Sam Zell, who unfortunately just passed away, I don't know, a month or so ago.
Yeah, well, so, I mean, David, Smart Friends is Eric's podcast, and he's does a ton of interviews with a bunch of great people. And we've kind of created this recurring segment. He has another one with his like rolling fund. He has a rolling fund called Rolling Fun with Aldone and Bo Fishback. Like he has these kind of like groups of people who jam out, and yeah, me, David, and Eric have ran a few of them, and it's a lot of fun.
Yeah.
And so, yeah, David had gone to lunch with Sam Zell and was planning to go to dinner with Sam Zell, uh, in the weeks before he passed, and Sam got sick. And
Yeah.
so David, a lot of what I know has kind of come through David. But I mean, I think what struck me the most is like, guy was in his 80s. He was living life to the fullest. David said he had talked to Sam, and Sam was most excited that he had just bought, 70% of a family business, like a legacy business that I think was making, I'll just make up a bunch of numbers, but it was making $30 million a year of EBITDA. And I mean, Sam was in his 80s and out there just like playing the game, and he didn't have to. And he also, I never met the guy, but he seemed to be doing what he wanted to do. He seemed to be allocating. He had optimized for freedom. He was flying anywhere in the country he wanted to go. He was working on deals he wanted to work on. He was working with people he wanted to work on. So like his unfortunate passing, I think, just shows you that like life can go any minute, and you better be doing what you want to do and not optimizing for some thing way down the road, because
Well,
we're all getting old.
yeah, I saw you tweet about that a day or two ago, something about like a question that you've been asking yourself lately is like, do I want to be doing this in 10 years?
Yeah.
Eh,
Yeah. I mean, I posted that. I sort of reposted that even like an hour ago,
Oh, you did?
before I
Okay.
walked up to interview with you. Like
Yeah.
two questions I asked myself before pursuing a big opportunity: could this have a meaningful, positive impact on my net worth or my happiness or my relationships? And yeah, in 10 years, will I be happy that I chose to do this? So
hmm
going to Capital Camp, going to the Berkshire conference, talking with people, talking with maniacs on a mission like David Senra, or I mean, one person who we always talk about on that podcast is Sam Hinkie, who we all three know, and like talking with people who have really, really, really long-term thinking
hmm
helps me, because sometimes I can get a little impulsive, and it's just like I've found that as I kind of let go and understand that we have a long road ahead of us,
hmm
hopefully,
Hopefully.
and the world's not going to end in 2 years, and like I'm playing a long-term game with long-term people,
Yeah.
and I should be optimizing for long-term decisions, and the more I do that, just it it's better. It's objectively better, because all the compounding happens
Yeah.
at the y you
At
know,
the
third
tail end.
third sigma. Yeah, yeah.
Right.
So, like, why are we trying to, you know I was listening to another podcast, and they were talking about that. Like, why are we talking about arbitrage when we could just be talking about playing long-term games, you know?
Yeah. Yeah. Yeah.
So,
So you mentioned going to Omaha for Berkshire Hathaway. Is that an event that you've gone to previously, or was this a new experience for you? And just kind of wanted to hear your take on the whole event. I mean, it's what they call
yeah,
it,
yeah, no,
the Woodstock for capitalists or something like that.
yeah. Have you ever been?
Never been.
Or
No, I had the
no?
opportunity to go this year, and I just had too much family stuff going on.
Yeah, no, I hear you. I just yeah, I mean, Charlie's 99, and
Yeah.
Warren is in his 90s too, and it seemed like if I ever wanted to go, now's the time to go. I'm not the biggest like Munger or Buffett like aficionado or nerd, but
hmm
I got to go with a few major Munger nerds.
hmm
And
Major
I got to go
nerds.
with Eric and a couple of other friends, and it was a good time, and it was a good weekend, and Omaha's a good place.
hmm
And again, it just stretches out my timeline of thinking to fill my thoughts with or to go enter a world that, a couple of 99 billionaires in their 90s are kind of the center of, and to see all the people that surround that is really, really interesting. So I enjoyed it. I would go back for sure. I'll probably go next year.
I think I read the first event that Buffett had. I think there were like 13 people there. Like the very first one was
There you go.
13 people, and now it's like, I don't know how many, 50,000 or maybe more. It's like seems like a football field of football stadium of people. So pretty cool stuff. I wanted to see if you had a little time for a fire round. You got 5 or so minutes for a quick fire round?
Yeah.
All right.
I'm
You
good.
seem like a big reader. I wanted to hear about a book that you think I should be reading. This is a question that actually Chris Powers' mentor, John Marsh, asks people.
Yeah.
What's one book that you think I should be reading?
Man, it's so hard to like put that into.
Did you?
I never
I want to
directly
real
answer
quick.
questions. Sorry.
You mentioned? Did you read? What's it called? The Hospitality book by Danny Myers.
Danny Myers. Yeah.
It wasn't Danny
Setting
Meyer,
the
but it was a
Table.
guy that worked for. No. It was actually a guy that worked for Danny Meyer who wrote a book called. I've got it over on my something about hospitality, like unreasonable hospitality. I think it's called.
I've read Setting the Table.
And Chris mentioned it as like a 10 out of 10 book.
I'd love to. I think I know what you're talking about, but no, I didn't read that. Just going back to books. So David Senra runs this podcast called Founders, where he's read hundreds of biographies of founders. Like books are going to show you like mindset and strategy, or they're going to show you tactics, right? And like all of these biographies tend to show you both. They show you a little bit of this glimpse of the background and the rise and the tactic. Like lately I've been rereading Shoe Dog by Phil Knight. Like that's an amazing book.
Yeah. Did you see Air?
Another book. Yeah, that was good. That was
really
a good kind of good little deal. But yeah, I mean, so I read books all the time for all different reasons, and I have 1,000 books. Like one book I just was recommended to me is Scaling Up Compensation, which is just literally a manual for how to build incentives and compensate people, because this is the year of incentives for me. Or the year of kind of I have these 3 companies and I have these people in my world, and how do I build incentive structures to grow the whole thing forward?
Well, how do you? I was curious I wanted to ask that, like the top couple people that you hired for like the companies, how do you incentivize them? Is it, do you give them equity? Do you give them,
it's kind
what's
of
the
always
book recommend?
Different.
Okay.
Yeah, I mean, and the book recommends 1,000 different ways depending on the structure. And so like we have kind of different incentive structures in all 3 businesses, but that's one big thing I'm working on, is how do I build this in the long term for all these businesses to converge into one plan, into one massive idea. So I try to build the systems to connect, and the structures to connect, and the people to hopefully connect one day. So that's a 10-year idea, but and it's something I don't have figured out at all. But
well, I would think also like part of it would have to do with like you figuring out the motivation of the individual too. Like to figure out what incentive is going to motivate them, you got to figure out like what is it that drives them, and because it's not the same for everyone.
Entrepreneurs I'm coin operated. Like you give me money and I'm happy. But some people you give them money and they're offended, or or they're like,
or they're looking for a recognition or appreciation, or something more intangible.
I would just go, here's money, and they go, I don't want money, or thank you for the money, but I want you to just not be a jerk.
Right.
But so
I wanted to hear about who's the smartest guy that's made the biggest impact on your life, your career.
Oh man, like look,
I'm sure there's a lot, but
going back to books, or like one book that I've read, 2 books that I've read probably 3 times is Who is Michael Ovitz and Powerhouse, the book about CAA, Creative Artists Agency, and how they built that, and how it worked and how it ultimately didn't work, although the principles of that turned out to be fine. But, Michael Ovitz became this self-anointed kind of center of the world and used relationships and used big ideas to ultimately like tip an industry from Hollywood, which favored the production studios, to taking the talent and packaging the talent and auctioning the talent and making the production studios, which used to run the world, now have to bid on these talent packages and drove up prices and just changed the market. So, or David Ogilvy would be another example of just the best writer. I mean, you want to talk about writing, and you can read the Confessions of a Ad Man and Ogilvy on Advertising, and just like I own an accounting firm, which is ultimately a service firm, an agency, CAA is a service firm, Ogilvy's firm is a service firm. Like, I just get to learn so much from these like masters of their craft who are fantastic writers and geniuses who, teach me something, and then they teach you also what not to do.
Right.
So,
last one real quick here. You've got couple thousand bucks to your name. You're just getting started. You're listening to this episode. You want to start a business. What business do you start?
Man, I did this. I mean, I created an agency. I created a CPA firm, and then for CostSeg, I think we put $40,000 in to start it, and it just grew and grew and grew, and we'd return the money back within 5 or 6 months.
Right?
But like,
oh, okay.
The best thing you can do is take something that that's valuable and go trade on that. And if you don't know anything that's valuable, you can spend time trying to learn something that's valuable, or you can trade, organized labor. I mean, you can go start knocking on people's doors and power washing their driveways. But, I would start an agency, and really the whole $1,000 would be spent on learning something and packaging something together and trying to acquire my first few customers. And I mean, easier said than done, but I've just seen thousands of people do it right in front of my eyes.
Yeah. Mitchell, this has been a lot of fun. Go ahead.
Oh, sorry, man. Or just,
no, you're good.
Nick Huber has that. And Nick Huber has that, 100 businesses he loves, the sweaty startups, and he's moved a lot more into agencies. So I'd go look at something like that. So I'll let you rerun the outro. Sorry.
Yeah, no, it's good stuff. I've got a nephew who's like 17 right now, and he's got you mentioned power washing. That's all what he's doing this summer and killing it. He's got a truck and a power wash, and hired a couple of his buddies to help him out, and like he's doing great. So there's just so many opportunities. And Nick's, to your point, Nick's PDF that you can get of like his top 100 business ideas. None of them are sexy, but like all of them, are going to cash flow, or is a great resource that, again, I'll put links in the show notes for that. But, so this has been a lot of fun, Mitchell. I really appreciate it. I love talking with you here today. For our listeners that want to learn more about you, cost segregation, the different businesses, Better Bookkeeping, what's the best way for them to find out about you and learn more?
Yeah, to find more about me, you can follow me on Twitter at Baldridge CPA. You can check out betterbookkeeping.com. You can subscribe to my newsletter. You can check out the Twitter account at RECostSeg. There's a lot of ways to find me.
Yeah, so you're out there.
Yeah, thanks so much, Patrick, for having me. This was awesome.
Yeah, I really appreciate it. Thanks so much.
Most people, if you ask them about taxes, my accountant deals with that. But the amazing thing is, the vast majority of accountants either don't know about this or don't know enough about it to recommend it to their clients.
Keith Wasserman said it was like the 10th wonder of the world or something like that. And I was like, what is this cost segregation thing?